Thousands of homeowners whose mortgages were bought by Vulture funds are being hit with interest rate rises in the run-up to Christmas. Some 19,000 customers whose mortgages are owned by Vulture funds but are managed by Pepper are being hit with increases of between 0.25% and 0.5%. This means some of them will be paying rates as high as 10%. Others are on around 7%. Pepper says the average is about 7%. But what's turned out to be very disappointing for some of these homeowners is that they only got letters confirming these rate rises and the extra they'll have to pay this week, just days away from Christmas. These people are less than happy to get letters telling them that they'll have to pay hundreds of euros more a year. It's on the back of interest rate rises from the European Central Bank. The Vulture funds that own the mortgages have decided to push through these increases. And these people, these 19,000 customers, are on variable rates. They can't fix because Pepper and the Vulture funds don't offer a fixed rate as a standard offering. They'll only offer it to people who are in very dire circumstances and go through an alternative repayment arrangement, as they call it. So this is very unwelcome news in the days leading up to Christmas, that these people have been hit again with interest rate rises. It means that a lot of these people have very little money left because they're paying the highest mortgage rates in the country, and they feel they've been abandoned by the government and by the regulators. They've had their mortgages sold by conventional banks and are now being managed by Pepper and owned by Vulture funds, who seem to just pass on rate rises as they happen to them. So a lot of these people now are struggling to make ends meet, saying that it's going to be a tough Christmas. So not a very welcome development for these homeowners.